Here we have the current stock market update for NVIDIA Corporation, stock ticker NVDA. Before we begin with today's chart analysis, if you find these educational materials to be helpful, please remember to click the like and subscribe buttons and leave your thoughts below in the comments section so that other traders can find this information more easily on the platform. So as we can see here, the stock is pushing to new all-time highs today. We will need to readjust some of these price levels here because the stock is pushing higher. Overall, the market is a bit shaky at the moment. We are seeing some declining activity in the benchmarks at the moment, but this isn't really having an effect on NVIDIA because, as we can see here, we are still pushing toward these upper levels. So currently the high that we're dealing with comes in at 141.80. So we will be changing this number here. And this will give us a bit of a resistance zone at the moment, but it still remains to be seen how long this area will actually hold. So what we're going to be doing here is looking for some potential areas to the downside in case we do start to see retracements lower. This would be sort of a strategy to mark some buying opportunities that could be seen if we do start to move to the downside. But what is most surprising here really is that this should be a major headline. I mean, NVIDIA trading at all-time highs like this. We saw similar situations with Apple earlier in the year where the stock just posted these marginally new highs, and then this became a major news story, and then the entire market sort of jumped on the bandwagon and really sent share prices much higher. It was really an extended rally to the top side, but this has not occurred here with NVIDIA at the moment. We are seeing sort of a boring breakout here to the top side, so it's not really clear how much further this will be extending. We can take a quick look at the indicator readings here to see the types of momentum conditions that we're seeing at the moment. And we are actually getting a little bit of a conflicting signal with some slightly longer term trend lines that are showing in the negative direction. So, there is some positive development here, but this trend slope here is a bit drastic. It looks a bit unsustainable here. This downward momentum does look more sustainable. So we really will need to see a fairly decent move higher here in order to break through this downtrend momentum condition and start to focus a bit more attention on the top side. It is surprising that we're not seeing more follow through here. It was looking as though we were going to start to see some very erratic price action with a high level of volatility focused on both directions. But this really only occurred to the downside. We did see some movements in the bearish direction. That would be right here. But then we did see a bit of a recovery and then just some marginal pushes higher. So these really weren't impressive price movements. To the downside, I still would be looking at roughly this 131 area as an area of support. I mean, we were watching this prior low coming in at 165, 130.65 previously. But this does roughly come in contact with the Fibonacci retracement zone, 38.2% Fibonacci retracement zone. That comes in at 131.15 roughly. So, if we remember back on this price chart here, there was a very significant area of resistance that was seen previously at 131.26. And then once this area was overcome, this is when we were actually able to form these new all-time highs. So this is a very significant price level to the downside. And I would start to possibly readjust the outlook here a bit. If we did see a break below here, I suppose we would start to be calling this a sideways consolidation period. If we did see a break below roughly 131, and then overall, in order to turn a bit more bearish, I would really need to see a break of roughly 124.60. So let's write that area in here as well. So this is the area that marks the 61.8% Fibonacci retracement of this recent trending move higher here. So essentially that would be this move here. But this also does assume that share prices are going to sort of top out at this 141.80 level. We don't exactly know that that's going to be true, but we are seeing a bit of a conflicting momentum signal at the moment. And it is quite clear that, the share price itself is having a difficult time moving higher. We are forcing our way into new highs here, but these are just incremental highs. These are very sort of slow price movements. And, wouldn't be surprising to me if we did just sort of top out here eventually and then see a larger retracement to the downside. So These are the areas that I would currently be watching, coming in right around 131 and then 124.60. I think that if we saw breaks below those areas, you could start to see an acceleration of share price losses. Looking to the top side, it does become more difficult to make projections when stocks are trading at all-time highs. The projection zones can be done. I mean, we can look at things like standard deviation channels and things like that, and there are ways of sort of developing upward price targets here, but they do become less reliable, I should say, less accurate, because there is no price history up here. I mean, we can't look at any historical support or resistance areas, and this does sort of affect how the outlook will be projected going forward. So if we do sort of look at this prior trending move from $100.95 to these near-term highs coming in at 141.80, we can get a little bit of an idea of where share prices can start to extend from here. So specifically, what I would be looking at first would be this 23.6% Fibonacci extension, which does come in at 150.54. So that is a bit interesting because it is coming in right around this round number figure. And then if we were to break above there, the next upward price target then rests at 156.47. So we do have to remember here that these are not exact types of projections here. This just gives us sort of an idea of what we could expect going forward based on these prior trend movements. We can look at these prior trend waves here, measure the size of those trend waves, and then start to get an idea of where share prices are likely to start to encounter resistance levels here. I wouldn't base trades on these. I think that this is better to just sort of look at a rough idea of what types of projection targets we could be looking at. I definitely prefer to have a confluence of signals that develop in the same area in order to base trades on those decisions. So, I really like to see three different signals coming in at one point. And if we're looking at areas that are, have never been seen before in the share price, I mean, literally uncharted territory, it becomes more difficult to make projections here. And I wouldn't exactly rely on these levels for a trade. But it does look interesting here that the 23.6% fib extension comes in just above that 150 level, because that's obviously a psychological zone. And then this does give us an idea of where share prices could extend initially if we do see a breakthrough there, because this next upside target comes in at 156.47 roughly. So roughly 157.60. I would put more stock in these downward projections here. I would be looking for lower price levels coming in right around 131. If we do see a break below there, that gives you more of a consolidative stance, and then ultimately a break below 124 we would then expect share prices to start to accelerate to the downside. So here's the current stock market update for NVIDIA Corporation, stock ticker NVDA. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.